Okay, well, it's been another week. Let's take another look at the markets. Now, this is silver, as you can see. What is it doing? What is it doing? That's the question here. If we just recap the history of the last few weeks, we were making higher lows and higher highs. We made a new higher high above the September high, which preceded this final decline here. It looked like a head, a left shoulder, a right shoulder. I thought we'd get a flag into the neckline. It broke down. I was buying under wicks here, buying under wicks here, buying under wicks here, and as you can see, we just continued down, and eventually I got stopped out. And we're still sort of hanging around at this extreme of this left shoulder here, at the spike extreme. You kind of come into the head. And we've got a big quarterly line, and I think a big monthly line, and we're sort of perched up on it. We deviated this here for the head, and now we're sort of perched up on it. And on the daily time frame, on the fast RSI, you can see we've got a building bullish divergence. At extreme lows, at a point of origin, at long-term trendline support, revisiting the head as point of origin, positive divergence. Nothing much to show for ourselves really on ease of movement. You know, this is just, yeah, I'm not going to read anything into that. So again, around these levels, around this white line here, I'm long with a stop somewhere down here, probably underneath this these two, this monthly, this quarterly trend line support here. The big picture on the daily is looking like this. We're at extreme range lows. Up here. If I can get a rectangle. Here's your extreme range highs. This is your triangle breakdown. These are the range highs. This is sort of the mid-range that we did come into here, in the middle of all this junk before turning down, and now we are pretty evidently, pretty clearly at extreme range lows. The issue remains, these range lows are sitting upon this very inefficient price action all the way down to 18, 19, 18, 17, 16, and however deep you want to go, maybe down to like 16. So it remains to be seen whether these range lows are going to continue to be range lows and portend a move up to the mid-range or to the range highs, or whether, as we've been discussing, the weight of the flower head is just too much upon the stem of our price action plant for the agricultural metaphor. I don't know what you'd call this. This is like the fat bloated head of a giraffe, and this is the neck of the giraffe. I don't know. Pick your own metaphor. So that's the daily. So I think being at such extreme lows, at range lows, with positive divergence, retesting the head, retesting a monthly and quarterly support line, with a pretty clear pivot here in white that can, you know, be my logic thing, my if-then statement thingy bob. If we can, you know, start closing above here, I'm going to, you know, stay long and I guess start adding when I can afford to add. If we start coming under it, we're probably going to shit our pants and come down to Lord only knows when. 20, 19 something, 18 something. Yeah, so it's if then, you know, if this, then I won't shit my pants. If then, I will shit my pants. And so will you, and so will everyone else who's in this trade. So obviously the trend-o-matic is on red, but we are at extreme value and range lows and all the jazz. I'm just repeating myself now. So that's my bull case for silver. Here's the daily again, slightly different look. We've got a slower RSI, maybe a double bottom, maybe a double bottom, something like that. Look at the 6 hour. The low and ease of movement was actually, this was the easiest push down. And it's sort of been chopping, more chop, one final one down, and a pop. You know, these new lows here were rejected for continuation, at least initially. And we got this big bar here, this big blue bar here. So we can make it look like that. We go down to the 2 hour for more granular detail. You see more closely this low to this low on momentum and on ease of movement. Yeah, clear positive divergence. This is the monthly, this is the quarterly line we were talking about. That's the sort of horizontal segment line. That's one on the 12 hour that captures much the same thing. Really, we want to hold above. We want to hold above. It would look kind of ugly if we retested down here again. That would have a weird, ugly look to it. I suppose you could say maybe this high will be support and you could buy again here at 22. Or just above 22. But I think that would have, personally, it would have sort of an ugly look to it as far as price action goes. So, yeah. Let's look at the indexes. Let's look at the S&P. Here we are on the daily. Boop. So this was the plunge. I remember around here saying that, well, there's the Friday. So I said either, but again I was saying assume it is shit because it looks shit, and assume it looks shit because it is shit. But again, on the Rhino in particular, you know, look at new highs, new lows of the stock exchange. The reading was as extreme as it had been at major previous bear market lows, and I said either on Monday, where's Monday? There we go. We're going to have an horrendous gap down, you know, straight away, or we'll see the commencement of the bounce. I tried to take a few small shorts here in this pivot area, and I tried also to take a few shorts above this wick here. I even closed some of them in profit, believe it or not. Because I've mostly gone back to being long silver, and I think I took some shorts up here that on this little, you know, this was a flag in the end it seems, but the pullback that was this flag, and I did close out for a little snack. High becomes low, and up we go. So from a price perspective, it just it doesn't look bad at all. On the ease of movement, notice your low. On the that was on the Friday. Yep. So let's find where it was on the Friday. We were here. So it was just divergent, and also on momentum. Look at that. I was thinking pullback more than anything else, especially when we came into this area here. I know we only got the flag, but when we retested up here, I thought, you know, there was an excess of bullish euphoria that it was certainly going to like 5k. So I thought we would dump out more. I thought we would go down to 4300s. It's not happened. It certainly does have a good strong bullish look to it now. Again, a move under 46.62. Failure of 46.92 to support would be indicative of maybe we'll come down and at least initially retest this area down here, these prices down here. on the half hour, you can see there was that double bottom. And again, it was the shorts I was throwing in sort of above here. You can see there was plenty of downward movement, and especially like here. Oh boy, that was the prime shorting. So the issue now is, can they turn that into support? And they made a good effort at it. You know, we closed right up there and right on there. I need room to stretch out these RSIs, but having two of them on the screen does. I want to give, you know, more room to price, but I do like to see my RSIs. So if we're going by our logic of the Trend-O-Matic, it's green. So I guess presumptively buy, as we lose, like I said, especially the 4662 pivot. The name of the game is buying. Bullish percent specs, big bounce back, not proportionate to the moving stocks, but hey, who cares, right? Maybe that's a good thing. Has a positive look to it. Naiad, not such a positive look to it. Real lack of enthusiasm relative to the size of this move. But if we're resuming an uptrend, then maybe that's enough. Maybe that's all the fuel it needs. That's all it needs to eat and to feed. Naiad finished on an up again. A big working off of the up-down cumulative advanced decline volume to lows, while price, you know, was powering up, and then took a little dipperoonie, and that took us down to an extreme, and then we've sort of recovered from there. The summation index down in the dumps. Again, this down move was just a slowing and a shopping and a churning. The moment it picks up to the upside again, we got a huge move, bit of a retracement. That's like a 30 or 40% retracement, absolute dumping out here. Stocks just don't care, just don't seem to care. Again, that side of that price pivot at 46.62, it's going to be as low as it wants. Markets don't seem to care. Huge move up from these lows, which again look lower than all these other lows, in these important lows in the calendar year. You know, and even further back. It made sense to expect a bounce. Boy, what a bounce, you know. So are we going to hold above this sort of key 35.40 area? Is what we're going to need to do now, I suppose. Looks pretty good. Stock's over the 50. Again, I would, to the extent I can trade the S&P. Like I said, I'm going to be presumptively long until we start going under 46.62, and we can review all these things throughout the week if I can be bothered when I get back from work. Because when I get back from work, my brain is absolutely scrambled, and I just feel tired, to be honest. It's hard to do your best trading in that state, or even your best analysis, or even any analysis sometimes, to be fair. You just want to zone out. Euro. So last time we were talking about how the euro had come back to this big 50 pivot, and it's still hanging around there. We've had the flag, we've had another touch on the pivot, breakout, Is this a back test? Is this a back test? Trendomatic says green for go. Let's go down. Let's start on the 6. Similar kind of look to it as silver. There was a similar horizontal line pivot on silver. For our own purposes there. Again, I'd like to see it hold. Lower time frames, go on. 2 hours. Not massively helpful. Impulse, pennant, impulse, again to the upside. You know, maybe. Does gold give us any clues? Well, who knows? Trendomatic is red, obviously after a plunge like this, but we've come into this whole thick mess of price action. We've been bobbing along, bobbing around. We put in the positive divergence on ease of movement, and then we've just, you know, almost like a megaphone, an expanding megaphone of price action that has been deeply unhelpful. But you can see the key pivot here. You can see it on the candle bodies, on the wicks here. Again, it's about half of this range. It's about halfway through this range. What's that? 1782, 1783, something like that. That's the key pivot for the time being. In terms of real inflation, I guess, or the tip-shy ratio, inflation protected bond divided by the short-term, 1 to 3 year Treasury yields, or the price, I guess. Is inflation going up or down, or up or down, or up or down? Well, it's down, but it's near the highs. So if this is the real measure of inflation, then whatever that mass is, we're just sort of bouncing around. Just bouncing around in this area. Not massively helpful. Gold hourly. Like the euro, like silver, I found, you know, there's these horizontal levels on. They're all kind of matching up together. It'd be good to see them hold. And again, worst case scenario that's isn't too bad would be highs become lows and up. But I think, you know, you would think this is strong bullish action, but there's just something about the look of it that just, I don't know, it's hard to really pin precisely what I don't like about it. I just don't like it. It worries me and scares me that it's not very bullish. Let's have a look at the dollar. The dollar doesn't have a good looks. We've just looked at a bunch of anti-dollar assets. So when we look at the dollar, you see how this functioned as the initial resistance. This level I marked out is the initial resistance here. We spiked up then into the middle of this triangle, which was the next resistance. We went down. They tried to buy it back up. It's bobbing back down. It's going down, back down, curling. Again, we want to see from a bearish perspective, sort of curling, rounding, dropping, sort of look to it. Yeah, that's what we want to see develop. And certainly we don't want to see a move like above. Let's use the box. Should we use the box? Yeah, a move over those levels would not look good. Trendomatic is green, RSI is red. Well, the Trendomatic on RSI is red. This is just a mess. We've got a positive reversal here that didn't lead to anything. Just compressed and squashed together and kind of ugly. We've only got the $1 index chart. Let's look at the 6. Does that shed any light? Choppy, ugly. And again, this is kind of our pivot here. Ended with a dump, but that doesn't mean too much. Can we make a case for a triangle? Yeah, sort of. Give it a bit more wiggle room. I mean, would you say that is sort of like the bounds, the upper bounds and the lower bounds? Or would you say, nah, I'll give it some extra wiggle room up here in imaginary price land? Let's give it some wiggle room in imaginary price land, because that's got a much better look to it. You're at these lows if you're dollarable. I'm supposed to be buying down here. I'm not. Let's go Bitcoin for fun. Not a whole lot since last time. I mean, last time we had the big gap down. I said we'd have this move back up. I feel like the lines I put in have been disappeared, unless they're on a lower time frame. I thought I put in some lines. Yeah, there we go. There they are. Look, I put them in last week. Bingo, bango. Look at that. Good stuff. Right up to the gap fill. You could resell it. We're dropping. We're chopping. So that's the area that needs to be overcome from a bullish point of view. We explored it here. But are we rolling over again? That's the question. Let's go down to the half hourly. Lord only knows what kind of reliability the ease of movement data has on a derivative version of, like, Bitcoin is not centralized, is it? I mean, where's this data coming from on volume? You know, at least with currencies you can say, well, maybe it's the amalgamation of some of the larger trading desks, some of the banks, some of the exchanges, you know, kind of put together in a big pot and averaged out. But I mean, who knows? Anyway, in any case, assuming it is, there's the negative divergence at this high on the ESA movement, entering the bearish reversal zone in a bear trend on RSI between 60 and 66, roughly. Who knows? So we've looked at that. Let's have a look at the Nasdaq, because it was hitting this big fib line that made me call short to begin with. We deviated, 1, 2, big drop, retest, drop, bounce, and we've come right up into the whole business of this low. Is it going to become resistance at this high, or was this all the drop the market needed, and now we're going to continuing mooning to, you know, wherever, infinity and beyond? Yeah, big time reversal there on the RSI. At this doji. Coming to this doji support and this old high. Coming into support, big time reversal on RSI, all the way down here. Prices up here still and finding support. That was a good buying opportunity. But what now? I guess if you think it's going to be resistance, you would sell. Oh, I don't know what to think. I literally do not know what to think about stocks. Let's see what the Trend-O-Matic says on the daily. Because on the S&P, the Trend-O-Matic was green. Red. The Trend-O-Matic is red on the Nasdaq, but it's got that kind of look to it. And again, a loss of these lows here. You could treat this as like a, you know, this is an inside candle. Friday was an inside candle of Thursday. So sell under, buy over. That would be one approach. Treat it like a breakout of the previous inside day candle. Semiconductors. Because again, I thought it was their ugly look that made me think the market might be turning more broadly. It still doesn't look great, to be honest. I mean, they're trying to turn this into a support. Failure of this to act as a support would, I think, lead us lower. Maybe come down here to 27,470 as the next real support. I still think it looks ugly. Again, anything over 31,140. Again, if you're not buying support here, you could buy on the break up through 31,120, 31,140, something like that. Bond is. So we did the gap fill, and I just wasn't making any predictions about what next. And then we came into support. Had I been paying attention on Wednesday, the 8th of December, I might have thought to myself, that's a good buy. Had a little bounceroo, and we've tagged that fib channel line there as being resistance. We pulled back. So maybe a move over 11546 would indicate buying strength. And certainly a loss of this would not look good. Or you could just sell anything under 11567 if you're bearishly inclined. I suppose. Let's zoom in. Let's get into the hourly. Yeah, there it's touching the fib channel line. There's your negative divergence. So the last signal we got was a sell signal at resistance. So maybe you're presumptively short on that basis if that was the last signal on the lower time frame. On the daily we're green. Yeah. Trendomatic says green on the daily, hourly, well, it's also green. But again, the last signal was a sell at resistance on negative divergence. That was your last signal. So you could buy there. You could say, well, that's kind of like a little double bottom going on in RSI, but you know, price close higher than it did here. Tricky. If this is going to line up with silver at all, and the anti-dollar assets, you'd have to say, well, you know, it's got to go up. But that's a narrative. That's a narrative we tell ourselves. We've got a bit of a triangle action going on here, so let's see if that helps add some clarity to that. That's sort of the apex of the triangle. Isn't that interesting? So that's where we got resistance as well. This whole thing here. Let's be daft and throw that in there. So that's my definitive statement. We start getting above these levels. It'd be buy on the breakout. You could buy at support here. But we get back above here, that would be a breakout buy. And the Trendomatic does say green on the daily, so we must obey our Trendomatic sometimes when we're not ignoring it. Uranium. Wow, uranium. So we had the channel. I put my channel on. There was a positive divergence that got broken. We just took out these wick lows here. We sort of came back into the point of origin move here. Wasn't quite enough. So we took out this wick low here. We've got a blast up, gap up, breakout through the channel, and now either we're back testing the channel or we're rolling over, basically. We look like we might be at some kind of support. Hourly says, what does the hourly say? These some movements going positive. We're at a bull reversal zone on the hourly. We filled this little gap. Yeah, is that buying time? Possibly. It's a viable trade, I think. Are we going to give back more of this insane rally? On the daily, the Trendomatic is red, but we've been at value. This is the problem. In terms of this micro move, you could say we're entering value because that's like 1, 2. We've returned to value, but the Trendomatic is red. It was clearer, like bang down here, bang in this whole fucking thing. Was a lot more obviously a good idea and a good trade, regardless of the Trendomatic being red, because the scale of the value on offer being on the daily time frame. On the hourly, it's less clear and less obvious, you know, and you're going against the daily now. I think my internet's getting slow. Come on, internet, you can do it. Leaves on the line, squirrels in the chimney, mice in the cupboard. Something's annoyed it. But, oop, no, it doesn't like that either. Well, thankfully, I think we're basically done. So I've said lots of ambiguous and non-committal things because that's how things look, to be fair. So, an ambiguous ending.